Now, a lot of people on YouTube and everywhere else are talking about whether it's a good time to buy. Is the housing market going to crash? Real estate investing really comes down to, is the market you're investing in a good one? And is it likely to grow? And is the deal that you're looking at fundamentally sound? Because if those two things are true, like if the market you're investing in and the deal you're doing are both really good, then the macroeconomics are not as important. Today, we are going to get into what is probably the most important skill in real estate investing, which is how to analyze different real estate markets and individual deals. And I actually developed a little slide deck that I'm going to walk you through as we talk about first how to analyze a market and then how to analyze a specific deal. And I'm actually then going to walk you through a real live deal. I'm going to look at the market and different levels, different metrics that you should be examining. And then I'm going to just show you how to analyze a deal in that specific market. So that's the plan for today. Now, I just want to remind everyone as we're getting into this, again, if you're thinking that it's a difficult time to invest in real estate, that is true if you don't know the fundamentals, right? Like if you're just reading the newspaper or talking to someone else who's like, the housing market's crazy. Yeah, there are some things that are difficult about it. But if you understand how to measure the specific deal that you're doing, you'll know whether or not it's a good time to invest in real estate because you'll be able to analyze it on a very individualized level. And that's really what you have to do. And I also want to remind you that you can invest in any type of macroeconomic conditions and in any market as long as you can do this type of deal analysis. So that's what we're going to do today, is give you that confidence to make smart investing decisions. Now, I'm not telling you have to buy real estate, but I'm going to give you the tools to make smart investing decisions in this uncertain economy. So again, the agenda is it okay to invest now? I'm going to talk about 3 different stages of deal analysis that you need to go through. Then we'll analyze a real deal, and I'll give you some tools to help you do this for yourself after this video. Plus, I actually have a great giveaway for you, and I think you're going to want to stick around for that at the end. It is super valuable, so check that out. All right, if you don't know me, just so I have some credibility, I can talk to you about this topic. My name is Dave Meyer. I'm the Vice President of Market Intelligence at BiggerPockets. That basically means I study the housing market all day. And the reason I'm here talking about deal analysis, well, one of the reasons is because it's one of my favorite topics. I actually wrote a whole book. I think you can see this right here. It's called Real Estate by the Numbers. I wrote that book. It's all about how to analyze deals so that you can make sure that you're buying good ones and avoiding bad ones. I work for a company called BiggerPockets. We're a community of over 2 million. We're actually closer to 3 million members right now. We have all sorts of great content like this free YouTube video that we're giving you on top of podcast, blog, all sorts of great stuff. You can check that out at biggerpockets.com. So again, we talked about, is it a good time to invest? And I think you know by now, my feeling about it is that it's always a good time to invest if your deal and if your market are performing well, because there is no generally true thing. You can't say it's a bad time to invest for everyone, nor is it a good time to invest for everyone. You have to evaluate that for yourself. Because right now, there are recessions, but certain markets are booming. There are price drops in lots of markets while others have none. Inflation is rocking the country, but some areas are actually hit a lot worse, and certain industries are facing the layoffs and challenges of the economy right now worse than others. And so if you look at a market, let's say like San Francisco, they're having a lot of layoffs. Where you look at a market like Columbus, Ohio, that job market is absolutely booming. So hopefully you see what I'm saying here is that, like, saying that it's a good time to buy, maybe it's not a great time to buy in San Francisco. And I don't really know. I'm just using that as an example. But buying in Columbus might be great. And I'm going to give you the tools to sort of decide these things for yourself right now. So the things you need to know is, 1, the economic climate. That's the first sort of step of deal analysis here. It's like, understand what's going on in the market on sort of this broad macroeconomic level. Number 2 is what's going on in the housing market in that area. And so when I was talking about how broad economic stuff, we're talking about like unemployment rates, labor market, wage growth, sort of like what's going on the big level. Then we talk about the housing market. It's like, what's the median sales price? Is there a lot of inventory to buy? What are rents doing? So we'll get in that step 2. And then 3rd, once you sort of understand what's happening on the market city level, then we get into the specific deals. So that's what we're going to do again today, starting with macroeconomic climate. There are tons of different metrics that you can look at. I've done some other videos you can check out where I sort of go into this in even deeper dive. But I think if you want to, just for the purposes of getting some reps in and practicing this kind of analysis, look at three things. Look at population growth. That's super important because housing, like everything, comes down to supply and demand, right? So if the population of a particular area is growing, that means that demand is likely going up. That's a good thing for real estate investors. Two is jobs. You want people to be able to pay their rent. You also want economic growth that fuels appreciation over time. Same thing with wages. So those are the three macroeconomic things that we're going to look at today. And again, these sort of just help you understand the backdrop of an economy. Because if you're looking at a market where, let's just say a market where population is declining and wages are going down, like you still can actually invest in those types of markets, but you need to adjust your tactics, right? Those are probably going to be higher cash flow kind of markets if that's what you're into, but won't have great appreciation, and you may have some vacancy troubles in the future. Those are okay things as long as you know about them going into them. Meanwhile, if you have a city where the population is booming and wages are growing, it might be harder to find cash flow because prices are going up so quickly, but you'll probably have lower vacancies and a lot of appreciation. It's really all a trade-off. There is no right or wrong answer, but by doing this research, you'll sort of understand what tactics are going to work well for you in that particular market. Now, the second thing, remember, that was step one, was sort of the macroeconomics. Then the step two is the housing market. And we're going to look at a couple of different things here. We'll look at sales price, we'll look at inventory and days on market, which are measures of supply. And then we'll also look at rent growth because these tell us as investors sort of like what I should bid on properties. Is it going to be hard or difficult to find properties? Will sellers be willing to negotiate? Is rent growing up and my cash flow is going to increase? Those are all super important questions. And then lastly, we'll talk about deal analysis, and the metrics that we're going to use are cash on cash return, which is basically just a measure of how efficiently your deal is generating cash flow for you. Because imagine I told you I had a deal that generates $500 a month in cash flow. That sounds good, right? And if you only invested $200,000 and the house is $200,000, then that might be a pretty good deal. But if you invested $1 million to earn $500 a month, probably not a great deal. So we use cash on cash to measure efficiency. Next, we look at equity growth, which is a great way to measure sort of appreciation and how much the value of your asset is increasing. And annualized ROI, which sort of combines different, sort of all the different returns you get as a real estate investor into one easily understood metric. Okay. So those are the things that we are going to be measuring, but I think it actually is just a lot easier if I go through this and actually run the deal in real time because it's all kind of just theoretical, but I'm just going to show you exactly how this is done. And so I picked a deal here in Des Moines, Iowa. I just went on the BiggerPockets website and found this website. It is a duplex. I really like small multifamily investing. That's how I got started. It's mostly what I buy still. And so this is a duplex. It's a nice looking house, but I'm seeing some maybe deferred maintenance, at least on the lawn here. But it is a nice looking house. It's pretty big. I like that porch. And the list price here is $260,000. It has a total of 5 bedrooms. So one side has 3 beds, one has 2, and then there's 2.5 baths total. So each side only has 1 bathroom. That's fine. I usually like personally to find 2 bathroom places, but sometimes I'll do this if it's the right spot. My strategy, just theoretically, guys, and just so you know, I don't know anything really about this property. I just found the listing on the website. I'm just using this as an example to show you how to do it. But theoretically, I'm going to use a rental property strategy. And some things I liked about the listing is that each unit is pretty big. They're more than 1,500 square feet each. So that's really nice. There's laundry in units. That's a real benefit to a lot of tenants. So that's what we're going to be looking at. So I'm going to actually just pop out of my screen share here for a second and move over to the BiggerPockets calculator. So this is the deal we're going to do. And I'm going to just dive into it. So the first thing, again, step one is macroeconomic conditions. So I pulled this data from the Fred website. And basically what I looked at here were the 3 data points that I was talking about. First is Des Moines, Iowa's population growth, which is represented here on that blue line. And then I also, just for means of comparison, put the US total national population growth on the same chart. And you can see and contrast them. And what you see here is that population growth in Des Moines is well above the U.S. average, which is a really good sign for investors. You'll notice that the timeframes are a little bit different here. Regional, like city or metropolitan area level data about population doesn't come out as frequently as national data. And so for the last time we have data, which I think is 2022 here, you can see that Des Moines was more than double the national average. So that's really encouraging from a demand perspective. Next, let's look at wage growth. And what you see here is that wage growth has sort of been mixed, at least compared to the United States. It's been up and down. Most recently, in 2022, it was up huge over the national average. But I think given this chart, you should expect that it's somewhere near the national average. You don't want to just take the most recent month and year and say, oh, look, it was 10%. It's always going to be 10%. If you look historically, it's been about the national average, just eyeballing it. And so I would consider that to be what I would use going forward. And it's pretty good, right? If things are the national average, that is a solid investment or a solid market, in my opinion. And then lastly, we'll look at the unemployment rate, which is below the national average. It's about 2.5%, which is insanely low. Everything's low right now. It's below 4% on a national level, which, as you can see here in historical terms, is really, really good. But 2.5% in Des Moines is exceptional. So when I look at these three metrics, if we look at population growth, wage growth, and unemployment, they all point to a positive economic climate in Des Moines, even during this uncertain economic times. And some of this data on a national level is 2022, 2023. I mean, there's not always going to be the most up to date, but what you want to look at is the trends. And second of all, you can also, one tip I like to give people is to look at like local chamber of commerce and local government websites or local newspapers. They all usually publish real-time information about the local economy. So if you want to go one level deeper into macro conditions in your area, I would recommend looking at some of those more local sources, not this sort of like aggregate government level data. All right, so that was step one. Hopefully you see that it's super easy. We're going to step two, which is local market conditions. So again, we're going to look at housing market conditions here. And the first one is median sale price. What you see here in Des Moines is that the sale price is $191,000, which I really like. That's super affordable. The median sale price in the US right now is like $400,000. And so this is less than half. So if you're looking for a market, I'm just picked Des Moines kind of randomly, but if you're looking for a market where it's cheap to get in, Des Moines seems like a good one. So that's really good. And it is up year over year, which is really positive given what's going on in the economic climate. And the reason that prices are going up right now and have remained steady is probably because inventory is really low. Remember, supply and demand, and inventory is supply. And what you can see here is that since the Great Recession, since going back more than 10 years, inventory, which used to be at 1,500 homes in a given month, is now below 500. So it's about a third of where it was 10 years ago. And it was already starting to get pretty low pre-pandemic, but it is still well below that number. And so that means that supply is constrained, and that bodes well, in my opinion, for future appreciation and growth in home prices, because that's just basically how supply and demand works. When there is low supply and relatively high demand, prices go up, and we're seeing that there is low supply. Now, the reason supply is relatively low is because people aren't listing stuff for sale. Now, new listings just measures how many people are listing their home for sale, and it is down from pre-pandemic levels and has stayed down, which means that supply is likely to remain constrained at least for the foreseeable future. As an investor, this means it's kind of a trade-off, right? It means on one hand, supply is probably constrained, and that means prices might go up in the near future. But on the other hand, when there are less things to buy, that means a more competitive market. So there's no perfect market, right? It's like the whole point of this exercise is not to find perfection. It's to understand what's going on so you can adjust your tactics and your strategy accordingly. And this means you'll probably be in a competitive market, but one that could appreciate over the next couple of years. Lastly, we're going to look at rent growth, and you can see that Des Moines actually saw a rent decline over the last year of 1%. Now, that's not super surprising. You can see the national average here, according to Apartment List, went down 1%. But this is incorporating multifamily housing, this data set. And multifamily has come down actually more than 1%. And so if you look into, I didn't put it here, but if you look into single family rents, they're actually about flat for the year, which is closer to what we're looking at with the small multifamily. I won't get into it, but large multifamily and small multifamily have totally different markets to each other. So, but this is something you need to pay attention to. Rents are flat or down. And so when you're underwriting the deal, which is the thing we're going to do next, you want to make sure not to expect a lot of rent growth. Otherwise, you might be disappointed and it might change the performance metrics of your deal. Again, said it before, I'm going to say it again. The whole purpose of this exercise is not to convince you to buy real estate in any particular market. It's to understand how to underwrite your deals and tell if the specific deals that you're looking at are actually good. And this informs that exercise. All right, so we've actually done the first 2 out of 3 steps. Hopefully you can see how easy this is. All you needed to do was look at macroeconomics. You can look at housing market data. Oh, and by the way, I got all that housing market data from Redfin. They give that away for free. Zillow also gives away a lot for free. So does Realtor.com. You can get a lot of that information for free about your market. So super easy to do that as well. The next thing we're going to do are actually run the numbers. I'm going to show you how to tell whether this deal that you randomly picked is a good deal. And to do that, I'm going to pop out of my presentation here and actually just go over to the BiggerPockets website. Here's the deal. It's 2806 Brattleboro Avenue, Des Moines, Iowa. We see, let's look at some pictures before I scroll down. So you can see that it's recently been updated. So I really like that. We have that luxury vinyl plank flooring. It looks like the windows have been, the whole thing's been painted a little bit. Bathroom, it's like rental grade finishes, but that's pretty nice. I could definitely see people wanting to live here. And what it shows is current rent here is for the 2-bedroom is about $1,000. 3-bedroom is $1,500. Again, they're pretty big. Oh, sorry. I said both were over 1,500 square feet before. That was wrong. The smaller one is actually only 1,100 and this one's almost 1,600, but still actually pretty good size units there. So if you want to, you could read more about it, but it's near the center of Des Moines, near Drake University. So that's a pretty good opportunity. So I liked all those things about it. So the first step in analyzing this deal is just to go to the BiggerPockets rental calculators. If you want to do this, you can actually follow along and just do this with me. Just go to BiggerPockets.com. You go to this tools thing right here and just hit rental property. And I just want to show you, I do this all the time. I'm constantly looking at deals. And I think it's really helpful to use a tool like this calculator because it means that you can do it really quickly. And not every deal, guys, is going to be good. I picked this one at random. This might be a terrible deal. And anyone who invests in real estate will tell you, you might need to analyze 20 deals. You might need to analyze 30 deals before you find a good one. So you want to be able to do it quickly. That's why I use this tool. So I'll just walk you how to use the tool. First things we've got to do is let's just copy and paste. Oops, sorry. Copy and paste this address. I'm just going to put it right here in the street address, Brattleboro. So we got Des Moines, Iowa. And next I'm going to add a photo because I do this a lot. Sometimes I add photos just to make it easier to go back and be like, oh, that's the gray duplex, because I never remember the addresses, to be perfectly honest. So that's first things first, is just put in the basic information. Next, I'm going to hit next purchase. And purchase price, let's just assume for the purposes of this exercise, it's $260,000. So let's do $260,000. And our closing costs are going to be about $5,000. Now, how do I know it's $5,000? Well, I bought a lot of real estate, and so I know that. But also, if you need help doing this, there are all these little buttons here that you can just hit, calculate closing costs. And it says 1 to 2% of the purchase price of the property. If you're unsure, 1.5%. So it's super helpful if you're new to deal analysis to just click on these little buttons here. I'm going to use $500,000. Now, if you want to rehab the property and you're going to be making upgrades to it, you can hit this button. I will be rehabbing, and you can do some additional information. But this one's already been rehabbed, which is super nice. And so I'm not going to click on that. But I will be going to property value growth. And so right now it's at 2%, which I'm going to keep because over time, over the history of the United States, the average appreciation rate is about 2.5%, 3%. Now I'm going to keep it lower at 2% because I like to be conservative, recommend you do the same. And so I'm going to keep mine at 2%. Next. So you can already see there's 5 steps in deal analysis, guys. property info, purchase, loan details. We've done 2 of those steps. We're going to move on to 3, 4, 5 super quick. So loan details, I'm going to put 25% because I'm an investor and that's the most typical thing you put down as an investor. And interest rates as of this morning when I looked were about 7.15%. It'll probably be different by the time you're looking at this. Mortgage rates are super volatile right now, but this is what the website I use, which is called Mortgage News Daily. Super good website. You can check that out. It's about 7.15. So moving on along, points charged is going to be 0 because I am not living in it. And I'm putting 25%. At loan term, I'm going to do the good old 30-year fixed rate mortgage, my personal favorite type of mortgage, because it is long-term and lowers my monthly payments so that I can earn more cash flow. All right, moving right along, rental income. Now, this is one of the hardest things for people to understand is rental income, but we already know that it's $2,500. At least that's what they say in the listing. But I'm also going to show you something another tool here on BiggerPockets that you can use. So if you go to this tools thing and go to rent estimator, you can put in the address of your property. So I'm going to do this and search address. Now, I'm going to adjust this to make sure that my first one, remember my first unit was 2 bed, 1 bath. So I'm going to hit adjust details and it says 875 and the confidence is very high. And one of the things I really like about this tool is it tells you if there are good comps. Like if there's not a good things to compare it to, it will say low confidence. But this one, it seems that there are good comps. You can scroll down and check those out. And see that for unit 1 here, we have about 875. I'm going to go check the second one though, because remember this is a 2 unit. So I'm going to go 3 bed, 1.5 bath and see what we got here. So this is saying 1125. So notice here that BiggerPockets tool is saying that rent for both units combined is going to be 2,000, but the seller is saying it should be 2,500. We don't know exactly what it's going to be, but we're going to look at both things. So I'll just show you guys in a minute. So again, look at this. So this says confidence medium. We're not going to, make stuff up here at BiggerPockets to tell you we're super confident about that. We have medium confidence in this 1125. So maybe the seller is right and it's more like 1,500, but we'll get back to that later. For now, because I always recommend being cautious and more conservative in underwriting if you're new to it, I'm going to put 2,000 in here because that's what BiggerPockets thinks it is, and it's the more conservative of the 2 estimates. So again, that's all I'm going to do, and then I'm going to move along. Okay, so next up, we're going to talk about expenses, and we're going to start here with property taxes and insurance. Both of these are what are known as fixed expenses, and although they can change, generally you know exactly what they're going to be for the upcoming year. So for property taxes, again, I looked this up. You can find this here on BiggerPockets. It shows it on the rent estimator I was just showing you, but we could look at property taxes are going to be $1,200 per year, and insurance is actually going to be a little bit more at $1,400 per year. And just so you know, I don't know exactly what the insurance is going to be. I just Googled what the average duplex insurance was going to be in Des Moines, and I found about $1,400. So that is what I'm going to use here. Those 2 should be super easy to look up. But we're going to move on to what are known as variable expenses, which are a little bit harder. It doesn't have to be hard, but it's just not the same every single month, and you can't get an exact quote for it. These are things like repairs and maintenance, capital expenditures, vacancy. You don't know what these are going to cost, but you want to plan ahead for them. So for repairs and maintenance, I'm going to use 8%. Usually I do something between 5 and 15%, depending on the condition of the property. If it's super nice, recently been updated, maybe 5%. If it really needs a lot of work, an older house that hasn't had updates, something more like 15% is probably appropriate. Because I don't really know what's going on in this house, I'm just using it as an example, I'm going to go right in the middle at 8%. For vacancy, I also like 8% because it is 1 month of rent, essentially. So if you figure out what 1 divided by 12 is, it's about 8%. So I like to plan on 1 month of vacancy every year, just in case. Hopefully you have no vacancy, but just in case, you want to be putting some money aside to know that you can cover that expense. Lastly, here we have capital expenditures, which is kind of like repairs and maintenance, but it's for bigger things like a roof or a hot water heater. And this, again, depends on the age of the house, but I like to put at least 6% here. So I'm going to put in 886%. What you guys do is going to depend on the condition of the property. Again, there are always these help buttons here if you want to figure out what you should put in each of these numbers here. Next, let's talk about management fees. I'm an out-of-state investor, so I'm going to have to do 8% here. That's about what I pay for my out-of-state properties now. Property management fees generally between 8 and 12%. They've come down a little bit. I think mostly it's about 8% where I see them. But if you're self-managing and you're going to do all the property management yourself, you could put 0 there. Next, we have utilities like electricity, gas, water, and sewer. And for me, when I look for properties, I like to find ones that are metered separately. This means that the tenants just directly pay their own gas, their own electricity, their own water, because I don't need to get involved in that, right? It's just easier if I don't have to pass those, pay those myself and then pass them along to tenants. So I'm going to assume this property is the same because that's what I look for in properties. So I'm going to do 0, 0, 0. Don't like HOAs. Garbage is something I actually do usually pay for. It's usually like $25 a month. It's pretty cheap. And then others. And that's it, guys. We've gone through all of it now. Property info, purchase, loan details, rental income, and expenses. And hopefully you can see how quick this is. I'm obviously trying to explain this as I go, and it took me like 5 minutes. If you were doing this and get good at it, you practice this, you could do it in like 2 or 3 minutes. It's super easy. All right, so all we have to do is hit this button here, and we can see what kind of deal we got. And at first glance, not a good one. We are losing $105 a month. So as is, this is not a deal you want. But I wouldn't write this deal off, and let me explain it to you. Because yes, with the assumptions that we've used, it is not a good deal. But a really important thing that investors need to internalize and understand is that every property is a deal at the right numbers. So paying full asking price and with the rents assumptions that we made and the loan assumptions that we made, it doesn't work. But it's super cool using the BiggerPockets calculator because you can come down here and you can make the right deal. Now, I'm not saying that the seller is going to accept any deal that you offer them, but using this tool, you can come up with an offer that works for you. Let me show you. Remember, we've been talking about how the income, BiggerPockets thinks it's about $2,000. The seller thinks it's about $2,500. We don't know where that's going to be, but we can find out more by talking to a property manager or local investors, because right now we're just using sort of algorithms to figure that out, trusting the seller. We want to get better information, but let's just say maybe we go somewhere in the middle and say that the rent on this place is actually $2,300 a month. Now, look at that. We just went from losing about $100 a month to positive cash flow about $100 a month and a cash on cash return of about 2%. Now, that means you'll at least be breaking even. So we've already seen that this deal has gotten better. Now, I'm not saying you can get $2,300, but upon doing further research, if you find out that the actual number is $2,300, then you know that it's a positive ROI. What about offering less than asking? We already know that in Des Moines, they're paying about 2 or 3% less than asking price. So what if we, instead of paying $260,000, which is the asking price, we went down to, let's say, $252. We took off about 3%. That went to $251, $252 here. Okay. Now we're doing a little bit better. Now our cash on cash return went from 1.8 up to 2.5. So we're more than breaking even. I would usually take a cash on cash return of 2.5% only if this is in a really high upside area. If it's not going to be in an area with a lot of potential appreciation, I wouldn't take a cash on cash this low. That's just me. So I would be saying, okay, how do I get this deal even better for myself? Well, a popular strategy right now is to see if the seller will buy down your interest rate. So instead of a 6 3/4 interest rate, what if we get them to buy it down to 6%? And this happens, guys. This is something that actually happens quite often. It's called a seller concession. Sometimes they want their price, they want that 252 number, but they're willing to give you a couple dollars back at credit. Maybe it's like $2 or $3 to buy down your interest rate. Now we're at 235 and a cash on cash return of over 4%. And this is starting to look more attractive, right? And what I want to stress here is I don't know if the seller will take this deal, but now with these assumptions, I can make this deal. So I can say, let's go talk to a property manager. I'm going to validate if the rental income can be $2,300 because that was the biggest change of all those like sort of adjustments I just made. And so if I could get $2,300, this is starting to look like a better deal. Now I'm going to tell my agent I want to offer $252 and I need a seller concession of them buying down my rate to at maximum, of 6%. And if that happens, I can do this deal. And this is what I mean when I say that every property is a deal if you have the right numbers, because now I've used the calculator and used my analysis skills to say what would be a deal that actually works for me. All right, cool. So make sure you hit save changes if you do all that. You can go down here and see all the different stuff about, long-term returns, which are well over double digits, which is better than the stock market. So even with the conservative estimates I've made about appreciation and growth, still a really good deal here. If you were to hold onto this deal for 10 years, you would make almost $130,000 using those assumptions. Now, before I go back to the presentation, I just want to show you one last thing, which is if you use these calculators, you hit this share button and it enable report sharing here and hit download PDF. And it's going to give you a super professional analysis here. And this is really important for a few reasons. First and foremost, if you have a partner or a spouse you want to show a deal to, this is an awesome way to get them on board, to show them that you've done the numbers, you understand the math behind your deals, and whether it's a good deal or not. But the second reason here is you can actually start to share this kind of thing with a seller, because if you're going to offer below asking and you're going to ask for a seller concession like a rate buy down, they probably think you're trying to just, shortchange them, to nickel and dime them. But you can go to them and say, listen, I'm an investor. I need at least a 4% cash on cash return because that's what you get with a high yield savings account right now. That's what you get with government bonds. So I'm not getting 4% cash on cash return. I'm not interested. And you can show them this and say, look, the only way I'm going to get the return I need to justify the risk and expense of this investment is if you lower the price to $252 and you do this rate buy down for me. So that is an effective way of doing it because you show them you're not just making these numbers up out of thin air. You've done the analysis and you've put thought and care into your offer. And if they take it, amazing. If they don't, that's fine because you have to stick to your guns and stick to the type of analysis and the type of deals that work for you. That's that. Hopefully you can see how easy it is to analyze deals successfully when using tools like the BiggerPockets calculator. Now, I'm going to pop back out of here and pop over back to my presentation, and we'll keep going from there. Hopefully you see that this is beneficial and you want to do it for yourself. If you do, we have some tool recommendations for you. I've gone over a couple of these things, but we'll just go over them again. For macroeconomic, I think Fred is really good because it's free, but you can also use tools like Statista, Y-charts. They're all kind of similar. So if you find one that has like a UI or user interface that you like, just use that. And again, I really like those local websites because they have more up-to-date information than a lot of the bigger websites. Next, for housing market analysis, you have Redfin, Realtor.com, and Zillow. And then lastly, if you want to do the deal analysis, you can use a tool called the BiggerPockets Pro. It includes the calculators that I was just showing you and a lot of other stuff because BiggerPockets Pro, the way it's designed is basically to be sort of like a one-stop shop for you to manage and scale your entire real estate investing portfolio. So I've already showed you one of the cooler tools. They're all pretty cool, but I told you I love deal analysis. I wrote a book about it. So I love the analysis calculators. And if you want unlimited access to that, you need to be a BiggerPockets Pro. You can go try it for free, but if you want to keep running a lot of deals, which you need to become a BiggerPockets Pro. We also have tools that will help you estimate rehab costs. We have pro exclusive videos that are worth, honestly, like hundreds, if not thousands of dollars on their own. They're super useful. Also, the rent estimator that I already showed you, there's tons of different tools that you can use as a BiggerPockets member. And just so you know, like thousands, if not tens of thousands, actually it is definitely tens of thousands of people are using these calculators every day to be successful in real estate investing. And just as an example, Aaron C. wrote to us and said, the BiggerPockets calculators are my go-to for analyzing potential properties. There is no way I could analyze the volume of properties I do without being a pro member. He used it to lock up a 3-unit that he's selling for a $70K profit. So now you can see how valuable these tools are. He's probably avoided a lot of bad deals and found a great deal for himself. Now, if you're wondering how much this costs, because real estate education in a lot of other places, frankly, is really expensive and can cost thousands of dollars. But at BiggerPockets, our mission is about making this information accessible to everyone. And so we price our products accordingly. And normally, BiggerPockets Pro is $390 a year, which is honestly a fantastic deal if it helps you get that first deal like it has for tens of thousands of investors. But because you watched this YouTube video today, and because we're feeling pretty generous, we're going to knock off 20%. And if you go to Pro Annual today, you can get that for just $312. All you have to do is use the code YTDeals24, YT like YouTube, YTDeals24. When you go to biggerpockets.com/pro and upgrade to pro, just use that code and you'll get 20% off. Plus, you'll get another bonus. I'm going to give you my book, Real Estate by the Numbers, completely for free if you go pro today. I really want you all to learn how to do deal analysis expertly. And if you have the pro tools plus this book, you're going to be amazing at deal analysis. I promise you, it's not that hard. All you got to do is read this book, get a little bit of practice, and you're going to be well on your way to successful real estate investing. So just as a reminder, I promised you guys I was giving you a giveaway at the end of this episode. And it is true. I'm giving you my book. It's a $45 value completely for free. If you go pro today using the code YTDeals.com, you'll get all this other stuff too that I don't have time to mention today, but it's basically everything you need to be a successful investor. Go to biggerpockets.com/pro. If you don't like it, if you go pro today, by the way, and you don't use it and you don't like it, we'll give you your money back guaranteed. No questions asked. It's 100% refund. Just ask support at biggerpockets.com. That's all I got for you guys today. Thank you so much for watching. Hopefully this gives you an idea of how to invest today, because as I showed you, it's really about local market conditions. It's about local economies, and it's about the specific deals that you're doing. It could be tempting to get caught up in all this national news, but really, if the numbers make sense for your individual deal, then it's a good time to invest. And if they don't, avoid those deals. If you want to use the tools I use, go to biggerpockets.com/pro, use the code YTDeals24. Thank you so much for everyone. My name is Dave Meyer for BiggerPockets, and I'll see you soon on the YouTube channel.